Hello and welcome back. Today we will focus on a small cap company which was established in 1963, has more than 60 years of industry experience. The company has a market capitalization of 563 crores and its business include manufacturing of animal feeds, mainly cattle feeds, solvent extraction, mainly coconut oil, and thirdly processing milk products, mainly ice cream. Before we move into business segments, let's quickly analyze the shareholding. We don't emphasize too much about shareholding unless there is something concerning or really interesting. Promoter holding in the company is very low and is about 23% now. Normally, we don't track companies with such low shareholding as it shows that they don't have enough skin in the game. The company has a low promoter shareholding for a long time. One interesting fact about the shareholding pattern is that if you look at the public shareholding, one can find that 6.12% of the shares are owned by Godrej Agrovet, Nadir Godrej, and group of companies. Godrej Agrovet is a leading player in animal feeds business in India. Having a player in a similar business as a shareholder is a positive. The company got some attention from its investors when in annual report 2023, it mentioned that it has appointed Grant Thornton as its consultant as it has decided to formulate a growth strategy for the upcoming years. As you can see from the annual profit and loss, the company's operating margins do fluctuate widely. The fluctuations are even wider if you look at the quarterly results. As you mentioned earlier, the company has three major segments and we will look into each of these segments. Animal feed segment is the largest segment. In this segment, it sells both cattle feed and poultry feed. Even though the company doesn't do con calls or investor presentation, the company publishes annual report which explains its business very well. In the animal feed segment, bulk of the sale is from cattle feed. The company has 52% market share in cattle feed in Kerala and 20% market share in Tamil Nadu. The volume of cattle feed sales has decreased over years due to reduction in cattle population in Kerala. However, it has been able to increase its sales in Tamil Nadu. In the animal feed segment, margins are quite cyclical and has fluctuated between 0 and 8% in the past. The margins in the segments are 3% as of third quarter of financial year 2025. Let's try to understand what decides these margins. As per the company's annual report, the margins were affected by raw materials used for making feeds, such as soybean meal, sorghum, and maize. Annual report also lists the various raw materials consumed. The major raw materials consumed are coconut oil cake, rice bran, and maize. India had a great rice harvest last year and is expected to be very good this year as well. This should have a positive impact on the rice bran prices. Rice prices have also decreased significantly over the last year. Maize, under major raw material, is also used for ethanol production. India has turned into a net importer of maize from an exporter. Indian maize prices doesn't exactly align with international prices due to very high import duty. There is a standard import duty of 50% on corn. However, there is also a special tariff quota of 15% on corn imports in special circumstances. The large import duty on agricultural products has been something that's been raised by US while discussing tariffs. Indian maize prices has been very high for the last year, which has affected the margins of animal feed companies and ethanol manufacturers. The maize prices have started to soften since the beginning of this year. Also, ingredients like soybean prices has been benign over the last 1 year, which should positively impact the margins of this segment. Let's now look at the oil cake processing division. The margins fluctuate even more widely in this segment. The margins have historically gone down as low as -6%. The profits of this division is affected by copra prices and selling prices of coconut oil. The copra prices has gone up and the coconut oil prices came down from 190 rupees per kilogram in 2021 to 115 per kilogram in 2023 and has gone as low as 103 per kilogram in 2023-24 financial year. If a segment has margins that vary so much, why would they keep operating this segment? This is because de-oiled coconut cake is a major ingredient of their animal feed. They need to process around 125,000 tons of cake to meet the requirement of cattle feed division. Now, if you look at the margins of the oil cake processing segment, it has been trending upwards and it has reached 16% in third quarter of financial year 25. As we discussed, it's evident that the margins in this segment is based on coconut oil prices. So tracking the coconut oil prices is essential to understand the profits from this segment. Coconut Board publishes the coconut oil prices. The prices at Kochi has touched 268 per kilogram from almost 113 per kilogram in 2023 and is trending up for the last 1 year, which explains the excellent margins now. So the company is expected to post even better margins in this segment this quarter. The third segment is the dairy segment. It is loss making for long and the revenues are very small in comparison to other segments. The main reason for this is state government's pricing policies on milk. Due to this, the company has decided to focus on ice creams and are trying to develop the brand Vista. They have started spending more on ads and has roped in film actors like Kalyani Priyadarshan to be their brand ambassador. The turnaround in this segment could actually be a game changer for the company. One of the biggest risks with the company is that its shares are highly illiquid. That means that the company shares trades in very small volume daily. It will be very difficult to exit the company if you have a large shareholding. If there is some really bad news, you may not even be able to sell it immediately or in a few days' time. Second biggest risk, as we discussed, is that two of the company's major segments are highly cyclical and is dependent on raw material prices. To conclude, the company will benefit from favorable cyclical scenario due to softening raw material prices and better availability. Soaring coconut oil prices will boost the profits of oil processing division. If the company can use the cash flow from other segments to expand the ice cream segment, that would change things for KSE. Working with a consultant like Grant Thornton to implement a strategic plan is a positive, and the company is trading at an attractive price earnings ratio of 8.25. However, key risks include illiquid nature of shares and cyclical nature of their main segments.